Okay, so what we have here is our income statement template and our balance sheet template, and those are just like really simple templates that we're gonna attempt to create straight out of the trial balance for the year. What we need to do in order to achieve this is to add some mapping. So we're gonna have the FS. This is gonna show if it goes to the balance sheet or to the income statement. We're gonna have the type, and we're gonna have our class. And our class are gonna be the accounts that we have here, and then we're gonna link those with some formulas. I always like to color those a bit different so they're easily recognizable. And since if we look here, we see that the trial balance is not closed. This means that we can just use the net turnover for our income statement. So I'm gonna add a new column here, formatted the same way, and call it net turnover. And it's gonna be the debit minus the credit. Copy that down with Control D, and the other column that I'm gonna need is gonna be my net closing balance, which I can use for the balance sheet. The debit minus the credit. Now what we have to do is we have to start like filling our mapping for those. We know that share capital goes in the balance sheet, so that's uncovered loss, retained earnings, current year, leases, so pretty much everything up to group 60 of our accounts when our expenses start is in our balance sheet, and then we have income statement. And the income statement goes all the way to the assets under construction, which is a balance sheet item. And the other balance sheet item is our prepaid expenses. And we can see that we have balances on those. Copy the income statement designation. The next thing we need to do is add our type. So this is equity up to here. And from here, probably the easiest way is to see if it's a debit or a credit, if we're not sure or if we know exactly. So leases, they're going to be liabilities. Then we have some assets. And those are all assets, and even the depreciation, although it's a credit, you know that it has to be deducted from the book value of the assets. So all the way up to here. Our suppliers are liabilities. Foreign supplier advances are an asset. Clients are also an asset. Export clients. Payroll is something we have to pay to our employees. Unused paid leave as well, other employee-related balances, other employee-related as well. It's going to be an asset. Maybe we gave some advances or something like that. Our income tax balance can be both an asset and a liability if we overpaid in advance, but here it's a liability. The personal income tax also. VAT on purchases is something that we get to recover. VAT on sales is a liability. VAT for reimbursement is an asset. Their balance is asset. Social security is health insurance. The guarantees are also an asset. The guarantees we have given to other companies. Shareholder balances. We owe something to our shareholders, to our insurance company. Perhaps we have some deferred tax assets. Other debtors, other creditors, cash is an asset. Also, assets under construction are an asset, and prepaid expenses as well. Here we have expenses, and those are all expenses all the way to here. This one as well, and other finance costs. And we also have some services revenue. This is going to be our revenue. PPE sales revenue as well. Other income. Yep, other income as well. And other income from exchange rates, FX, and other finance income. What I'm not seeing here is that our PPE sale, the sale was for less than the book value. So pretty much getting a loss on it. But we're still going to leave it as a revenue because we're going to put it in other income with a negative sign. And our class. So this is our share capital. This are our retained earnings. Then these we're going to designate as leases. Have property, plant, and equipment, which is all the way to here. Our right of usage is intangibles. And also its depreciation is going to be an intangible. The other depreciation is in PPE. And the other thing that's going to go in PPE is our assets under construction. Then we go to inventory, which is inventory. I can see that it is 0, so that wouldn't matter. But still, domestic suppliers are trade payables, which also goes for foreign suppliers, for other receivables, advances from suppliers. We have trade receivables, this one as well. We have some other payables, and those are pretty much gonna get the attention. Call those intercompany. Actually gonna call them just related parties because I don't know if maybe at some point it might become an asset, and it's a good idea to keep the mapping pretty much the same year over year. So our insurance is also in other payables and other creditors as well. Okay, let's go up here. Other employee related, we have some other receivables here. VAT on purchases as well. Guarantees as well. Deferred tax assets is just deferred tax assets. This is other receivables. Assets, cash on bank. This is simply cash. And then we go to expenses. So we have our material expenses. Then we have our hired services, depreciation, and amortization. I'm gonna put those together. Then we have payroll expenses. We're gonna include those and those, and then some other expenses. Finance costs, and this is also finance costs. Our prepaid expenses are gonna be other receivables, and it's gonna be sales revenue. Gonna be other income. And this is also going to be other income. And this is going to be finance income. And this one as well. And what we can see here is that actually our other income will come at a negative. So what we're going to do here is we're just going to move this to other expenses, as it's pretty much a loss recognized on PPE. And we're going to separate it in the cash flow statement anyway. Okay, that's pretty much it. We have our net turnover, we had our net closing balance, and the only thing that's left to do is to link those in the income statement and the balance sheet. And let's start with the income statement. So the way we can do that is we can use some ifs and go to our mapping, select our net turnover. Then our criteria range 1 is going to be our F column, the class of the account, and our criteria is going to be our account. Let's format that, and we can see that it's negative, and that's because revenue is on the credit. So I'm going to flip that, and then we're going to just go ahead and paste it everywhere. If we used the proper names, everything should link up just perfectly. I can see that finance costs has some issues, so let's go to our mapping. And yeah, what we wrote here is finance costs. Okay, and now our income statement is fine. And the best part about this is that next year we can just use our account numbers to VLOOKUP our mapping and just look at some new accounts, or if we know about some changes, and our income statement is going to be ready. Okay, now let's link our balance, and you can see here that I have a column for adjustments and adjusted, and you're going to see in a second why that's so. Doing the same thing, sum ifs. Our sum range is going to be our net closing balance. Our criteria is going to be our class, and our criteria range is going to be our class, and our criteria is going to be here, PPE. Okay, let's drop that down, stretch that a bit, just copy that over here. Okay, we named this cash. We know that inventory was 0. I think this is fine, and then we can go ahead and copy it here, and you know that we need to flip those because we present them as positive signs, although they're negative because there are credits in our trial balance. Our leases, trade payables, other payables, related parties. And we have 766,000 difference. And you can see here that we have 774,000 result. We have to link our results because our trial balance is not closed. Gonna leave that the before tax result, and we're left with 8,000 difference. So maybe what we did is we skipped some account and maybe used something in our mapping. So the easiest way to do that is we're just going to select our whole table, create a pivot table, and just use those, the FS, the type, and the class. Just use our net turnover and net closing balance. Just by going here, I can already see that what was my difference? 8,000. You see that here I have 8,000 other income. And yeah, I switched everything to other expenses, and I didn't include my other income. So what I can do is just add a few lines here, other income, and if I just copy my formula, everything should be fine. If I go to my balance sheet now, I can see that my assets equal my equity and liabilities, which means that my balance sheet is reconciling properly. And that was it. Just a simple and fast way to go from a trial balance, add some mapping, and create a fast income statement and balance sheet that's properly linked to the trial balance, and you can update it anytime you want.